Hello and welcome to the Mortgage Minute. I'm Ben Cason right here with Vern Larson from Advantage Home Mortgage. Vern, how are you doing?
I'm doing good. Thanks for hosting the show, Ben.
Oh, absolutely. I'm Ben Cason from Wake Up Pueblo. Excited to talk today about mortgaging and about your job, about everything you do. Let's just start off with run me through what your job is and what it entails.
So the job of a mortgage broker is pretty fun. What I do is I am your person. So I go out into the market, I get with investors, find the best money, best rates, best terms, best loan that's going to fit your unique situation. So everybody has their own situation, and that's what we really pride ourselves in, is finding the best, terms and rates and closing costs that's going to fit your loan. So it's not a cookie cutter deal. It's not a one size fits all. Everybody has their own loan. And so, my job is to go out there and find you that loan.
Absolutely. So how long have you been doing this for?
Well, I started in 1997, so I'm working on my 23rd year. I love the job. I've never left it once I got into it. It's a really rewarding career. If anyone out there is thinking about a new career, mortgages is a great rewarding career. You get to, have that closing, get people their dream homes, help somebody almost each and every day of the month. So.
So
really nice.
What got you into it?
Well, I was actually selling radio advertising to a mortgage company, and I was just fascinated by the business. And he kept bringing me in, and he's like, "Yeah, why don't you work here part time?" And I was like, "All right." And it was around Christmas, and everybody needs extra money around Christmas, so
Sure.
I came in and worked for him a few days, and I was like, "This is really awesome." And he's like, "I'm telling you, this is where I really think you should be." So I put in my 2 weeks notice, and the rest is history.
Well, there you go. Gut feeling, just ready to roll on that.
Ready to roll, yeah.
That's fantastic. That's really cool. So let's get into the brass tacks here a little bit. So
Okay.
I don't know a ton about this. So if a guy on the street in Pueblo comes up and asks you, what's the difference between owning a house and renting? What would you say is the difference there?
So owning is you're creating wealth, you're creating equity for yourself. If you're renting, you're creating equity and you're creating wealth, but it's for your landlord. So when you make that, $1,000 payment to your landlord, he's going to use that to pay off the home, and he's eventually going to have that asset paid off. So in our opinion, always buy as soon as you can, get in that house, start creating that wealth and start creating that equity. There's no easier way to create wealth than through real estate.
Can you expand on what you're saying by building equity? Because you're saying you're building equity for the landlord versus yourself. What does that mean?
So sure. So if you bought a house for $200,000 and you made 12 payments of $1,000, then your balance is going to be like $193,000 after you pay interest. So you've created $7,000 in wealth for yourself. Eventually, 10, 12 years down the line, if you pay a little extra, you're going to have that house paid off. You're not going to have a house payment. If you decide to buy something else, sell that house, and you have a large down payment to put on the next house. So you're creating that wealth for yourself.
Just like creating a pie of the house that you're expanding your piece of the pie of the house that you're owning, correct?
Right, exactly. And then you can do whatever you want in the house. If you want to knock down a wall and put it in a bigger room, go for it. You want to add a bathroom, go for it. You want to put that fire pit and, horseshoe thing out in the backyard, go for it.
Yeah, that's awesome. So how hard is it to get a loan / a mortgage? Take me through, is it a really hard process? What's your role in that as well?
Well, I just don't want anybody to be afraid. Okay, so there are going to be some loans that are a little tougher to do and a little more paperwork intensive. So if you're self-employed, if you're, out there painting houses and you run your own painting company, we're going to ask you for a lot of stuff. But if you work at, a big company, Vestas or whatever, steel mill here in town, all we're going to need is a pay stub and a W-2. It's really not that tough. Wow. So each loan is not a cookie cutter. Each loan has its own paperwork it's going to need, but we're going to be straightforward with you right out of the gate. We're going to let you know what you need to bring in. We're going to get you a comprehensive list right away, and it won't be bad. I promise. It's worth doing.
That's awesome. That's worth doing. All right. So what are the steps if I want to go down that road?
Well, the first step you're going to want to do is get pre-qualified. The mistake we see a lot of people do is they go look at a home with a real estate agent before knowing what they can shop for. So if they go out and look, at a $200,000 house, but they really qualify for a $400,000 house, they're just not finding that house that fits their needs or whatever, and they don't think they can buy, but it's because they don't know what they should be shopping for. So step one is get with a mortgage professional, find out, where you're going to fit in your budget. and we're going to calculate everything. We're going to calculate your debt to income ratio. We're going to calculate how much you need for a down payment, all those things. So we're going to figure out, where you want your payment to be, what size house that's going to be, and get you in the right shopping area. And then, we can always help you find a real estate agent if you don't have one.
So you're saying call you before a real estate agent?
I, for sure, would always get pre-qualified first. That way you know what you're looking for and you're good to go. The last thing you want to do is go out and put a house under contract and not be able to buy it, because then you just, you feel horrible.
Sure.
You feel for the seller. You feel for all the agents that took the time to show you the houses. So let's get you pre-qualified first. It doesn't take a long time either. So you can call in and, we're really tech savvy. You can text us your pay stubs. You can text us your W-2s. You can email, scan, fax, whatever you need to do. We just ask for a few documents in the beginning to get that figured out, what you're going to qualify for. And we can do everything over the phone. So you don't even have to take time out of your day and come down. It's about a 5-minute process over the phone.
That's awesome. And Vern, how do they contact you whenever they want to make that step?
We prefer if you just call into the office. So it's 719-546-3100. That's 546-3100. And a lot of mortgage companies, will ship you to an online thing and have you fill out applications, which that's fine. But that we really believe in that person-to-person contact, because you might have something in your situation that's not going to come through on an electronic application. Sure. Where if I'm talking to you, we're going to know. So if you say, I work for Johnson Painting and my name's David Johnson, then my next question is going to be, hey, do you have any ownership in this? And we're going to know. So there's a lot of stuff that you wouldn't even think about that we do. And that helps us get a lot of loans done. So always call in if you can, 546-3100. It'll take you 5 minutes. We answer on evenings. We answer on weekends. So that's the way to do it.
Cool. 546-3100.
Yes.
So when it comes to that as well, how long does the process of getting a mortgage usually take?
So there's a couple of different processes. So you have your pre-qualification, where we're going to figure out what you qualify for.
And that's what you're doing before you contact the realtor.
Right. So that process, a day, maximum a day, we're going to have you a number and then get you out there. Well, then you have to get a house under contract. Right now, could take a few days, could be the first house you look at. We just don't know. And then once you're under contract, you can plan on about 30 days. Some scenarios can close as quick as 10 days if we don't need appraisals and things of that nature. And then some, scenarios may be longer. Maybe your seller doesn't want to sell for 45 or 60 days. So somewhere between 10 and 60 days is what we typically see.
So it's a process, but that's actually a lot quicker than I thought it was going to be.
Yeah. So. And it's each scenario. We've had 10-day closings this month and we've had 30-day closings this month. So it's going to be, one of those is where you're going to be at.
So which one of those on your side is do you prefer a 10-day closing or like a 30-day closing?
Well, I always like the 10-day closings. Sure. I don't really get to know people that way, but the most memorable closings are always going to be those, 60 or 75 days where we spend a lot of time together and for whatever reason. But yeah, the 10 day is always nice because everybody's super happy and, it creates a lot of referrals that way for us.
Absolutely. So how important is a credit score for getting your mortgage set up? And what is that credit score and how can someone like me improve it?
Yeah, credit score is super important. Okay, right now, the bottom credit score we work with is a 620. So you have to have a 620 or higher. A lot of younger people have really good credit that we've been noticing. The easiest way to get a good score is to establish some credit. So you want to have 3 open and active trade lines. That's really the key. So 3 open and active, and you don't want to go crazy. You don't want to go out there and buy a Lamborghini and have huge payments because that's going to hurt your debt ratio or your debt to income ratio. So you want to have some, maybe some smaller credit cards. If you already have a student loan, if you already have a car loan, those are things that count. But things that don't count that people think are like their utilities, trash bill, that doesn't really show up on your credit report. Your cell phone, gym memberships, none of that shows up. So it's anything you get at a bank or reports to credit. And there's even some smaller banks in town that don't report to credit, so you wouldn't know. Again, so start with us. If you don't have the score, we can give you a roadmap on how to get the score. And we have great success with this. Just this month, we had 3 months ago, a guy applied with me, had a 481. So that's kind of a lower score. Okay. And so I gave him a roadmap. I was like, here's some easy things you can do. See if you can get this lined up, get that lined up, get this paid off. and, see me back in a couple months and let's see what we can do. Mm-hmm. He just reapplied, has a 644. We're going to do a VA loan, can do that with no money down. So it's just a perfect scenario. So always start with the mortgage, get it figured out, and then we'll get you in a home.
That's amazing. So he brought it up. How long did it take him to bring that up, if you don't mind me asking?
Like, he started in March, and
Wow.
and we're going to be closing next month. So, I mean, yeah, it was a really short 6 months for that far to go. That's a good number. But if you're, 15, 20 points away, sometimes it can be as quick as the next cycle. You know what I mean? So that as soon as the credit reports again, if you do what we're saying, sometimes it will pop you. So,
wow, that's crazy. So can you take me through like what was his emotion whenever he found out that he got the 641, right?
He was so excited because he called and he said, I think I'm there. Cause we use the tools just like everybody else, like the Credit Karma and stuff. But those numbers are usually a little off. They're usually a little higher. And he's like, yeah, I'm seeing a 660 on Credit Karma. And I was like, all right, well, we'll pull it and see. And sure enough, 640. So yeah, no, he's super excited. Already had his eye on a house. So he knew, and the house was still there, got it under contract. So he definitely stepped right into his dream home.
That is an awesome story.
Yeah.
So if your credit score is low, it's not hopeless to come back.
No, we're never hopeless. So if you're motivated and you want to follow some steps, we will get you on the right track where you'll definitely get that score improved. It is the one thing that can be, I don't know if the right word is manipulated, but a credit score can definitely be fixed really quick.
Wow. Well, that's great. So
yeah. So anybody that's made a mistake, hey, I went to college, I've had a bankruptcy, all that stuff happens. So yeah, bad things happen to good people. Don't worry about it. We'll help you get where you need to be.
That's fantastic. Awesome. That's an awesome story going up that much. That makes me really happy, even though I don't know the guy. Okay, so that's part 1 of the Mortgage Minute. We really appreciate it. This is a multiple part series. So part 2 is going to be coming out again in 2 weeks. So keep an eye out for that for the second half of the interview with Vern Larson here on the Mortgage Minute. You don't want to miss that. Again, that's in 2 weeks. Here's a quick sneak peek of what that's going to look like.
So the market here in Pueblo has just went bonkers.
So it's thriving right now.
It's thriving. So basically interest rates just bottomed out to an all-time low. 50 years, I guess, is the last thing I read since rates have been where they're at. So almost everything is under 3%.
Thanks again for listening. We really appreciate it here at the Mortgage Minute. You can call Vern Larson at 546-3100. Again, that's 719-546-3100. Thanks a lot. Be watching out for that second part of the podcast coming out in 2 weeks. Check out the rest of the stuff here at Advantage Home Mortgage. We appreciate it.